Good afternoon, everybody. Welcome to the inaugural Homeland Uranium Conference call. I'm Arlen Hansen, President of King Communications and appointed Investor Relations for Homeland. Presenting today is President, CEO, and Director Roger Lemaitre. We believe in communication excellence and wanted to take the opportunity to make our faces familiar with you, to answer any questions you may have, and allow Roger to present his game plan and how he wants to add shareholder value to the company. I remind you to please use the Q&A session during the call at any point, and I'll be moderating the questions for Roger at the end. So we invite you to ask away. Let's get to know each other. And once again, this won't be our last conference call. We plan to update the market quite regularly as we progress on these assets. So with that, Roger, I'll hand it over to you.
Well, thank you, Arlen. And everybody who's participated and everyone who will look at things on the conference call in the future by going through the on-demand function. I really appreciate you taking the time to hear our story. I know things are very busy, and I hope that this is the start of what will be an interesting relationship and are constantly sending out news to the marketplace to let you know what we're up to. All right. So our company, Homeland Uranium, we are now in our, seventh week as a company. Of course, we did exist as a company called Valley View Resources beforehand. And what I love about our company is that I think not only is it the right commodity, it's also the right place at the right time. We're US focused uranium developer and explorer on one of the more interesting projects, I think, in the United States. We will be making some forward-looking statements. So, of course, please keep this in mind when we go through the presentation. About Homeland, like I said, we've been around for a little less than 2 months, but we have 6 really key things that I want you to think about our company and how we fit into the uranium space. We're U.S. focused, a resource-bearing company. Not every uranium company out there sits on historical resources. We're one of the few that are blessed to do so. And quite frankly, U.S. domestic supply is urgently needed. So we believe that if you can build it at a profit, there's going to be a home for whatever it's produced here on the uranium side. Today, despite with the global politics and the cleaner energy and the things, I don't think in my 25-year career in the uranium industry I've ever seen uranium and nuclear power being accepted the way it is today. There's substantial momentum behind it, and we'll talk a little bit about that. Our historical resource base in Colorado, in a former producing district, was acquired for 15 cents US a pound, which leaves an awful lot of room for everybody who's involved in the company to see significant value appreciation, even investors coming in today. And we'll talk about that moving forward. As part of our our closing of the transaction that brought these uranium projects to the portfolio, we were able to complete a very significant financing with $16 million Canadian in our treasury. So we're well financed to do the work that we're going to talk about. Our board is exceptionally strong. This should not be a company board in the company that's at a $25-ish million market cap. These are heavyweight players in the industry. And our valuation today is very attractive compared to peers. And I think with a very simple work plan that we have going to lay out for you today, there's a real opportunity to see the company re-rate its value. So with that, at the beginning of March, we closed a transaction with a private company called Shift Rare Metals to pick up 2 uranium projects in Colorado in the northwest corner, near the former uranium mine run by Union Carbide called Maybell. We're well financed, but I think the focus on the States is probably interesting today, given what's been happening in the geopolitics. And we were, of course, looking ahead of this back in the fall last year when we were putting this together. But basically, I think our premise is that there's going to be a regionalization of the uranium industry like we saw back in the pre-Cold War era, and having energy sovereignty is really, really important to a lot of Western countries, and particularly in the United States, where energy is front in mind of the current administration, who's putting in place measures to spur uranium mining and development in nuclear power in the United States. But the U.S. is very hamstrung by the ability to produce pounds domestically. They produce less than 1% of their current needs, and probably will have a struggle to reach over 5 to 6% in the next 3 or 4 years. And certainly nowhere getting near being secure in your uranium supply. So I think it's a great time to be in the United States. U.S. pounds are worth more than they've been ever in the last 25 years. And we'll be looking to grow our resource base here, the historical resource base we've acquired through through both acquisitions, but primarily through our exploration and development phase at Coyote Basin. And I won't spend a whole lot of time on these things. The world has changed, and then I don't think anyone who's been in the industry as long as I have in the uranium would have ever thought that we'd see the days that we're seeing today. Not only is the carbon-free benefits of nuclear being recognized by even environmentalists, we're seeing a net new reactor construction, not even including the SMRs, with substantial growth. Geopolitics is really coming into play. We're seeing restrictions on exports from countries that are challenging to the West, and incentivized nuclear fuel supply chain and uranium supply chain market issues. We see presidential order accelerating uranium development projects, included as part of the critical minerals initiatives. So it's sort of a perfect storm to be in the United States uranium sector. And we're even seeing big tech jumping into the market to be either taking offtakes or supporting new build SMR type reactors because they recognize the need for secure, stable baseload electricity and with the clean air benefits. And we're seeing all these companies jumping in. Probably more than anything else, what's changed that really excites me, and we could talk about this for hours and hours on end, is that even the most staunchest of uranium supply people who think supply is endless have come out in just recently in this last month, and particularly the IAEA in their red book, which comes out every 2 years, saying, yeah, we have enough uranium to meet the needs by 2050, but we're gonna actually have to put some money in the ground to find some of it. And that's a substantial change from their position over the last 25 years. So even your utility focused groups are saying, oh, we need to find more uranium. And that's where we come in. My apologies, son. I think more than anything else for investors, you can only really see the spot price of uranium. So you're going, spot price is off its high. But I caution you on this because most uranium, the value, all uranium that goes in the spot market will eventually be turned into term pounds and sold to utilities through term contracts for the most part. Not every pound, but most of it. And we're seeing that in the last 6 months, we were in a weird market where the term price was higher than the spot price, or spot price higher than the term price, and then it dropped off the other way. The last 3 months has all been about tariffs and for U.S. suppliers and deciding whether or not they want to jump into market, where they should buy from, and whether it's going to be acceptable, or whether Russian uranium products might come back into the U.S. market. And prior to that, in the previous 6 months, it was all about the spot price moving so fast that 2/3 of the participants couldn't play in the market. But uranium supply is only one piece of the value chain that utilities look at. So in the bottom left corner here, utilities, the things work from left to right in terms of value. Richmond taking yellow cake and turning it into fuel pellets, but the utilities work backwards. So you can use when it comes to the procurement cycle. So you can look over here on the bottom two charts on the right here. That's the conversion and enrichment prices. They're at all-time highs and they haven't come off, even though the uranium prices come off. And that tells you that this is a short-term pause while utilities figure out where they can go in the market. And basically, you're coiling up a spring by pending up demand for those last 6 months. For us, the key part of what we're going to do in the United States is turn around and reopen this district that was historical production over the past, from the 1950s. The flagship project is Coyote Basin. It's here on the right-hand side or the east side. This was a Western mining project back in 1978-79 where they made a significant historical discovery of uranium. In fact, it was so odd when the vendors brought this project to us. I couldn't believe, given my history in the uranium sector for 25 years, that I hadn't heard of this project before. But when you do the digging and do the research, actually true, significantly historical resource there. That's going to be our focus here for the next couple of years. We also have to the west our Red Wash project, which is more grassroots, covering the same stratigraphic package that we see at Coyote Basin, and with uranium showings on it that have yet to be followed up with drilling. We're located right in the northwest corner of Colorado, near the Utah border, just south of the Wyoming border. And we're right dead center between the three existing permitted conventional mills in this space. We anticipate that Coyote Basin will likely be a more conventional scenario. We don't think our limited information that we do have suggests we're below or above the water table. So ISR recovery might not be possible. That's to be determined. And so we could truck to any one of those mills if they're up and running. Henry Mesa is the only one that's running today. But I think we're going to look at this a little bit differently and consider a heap leach angle where we can recover from the heap leach solutions uh, using using resins as done in the ISR projects, and open up the possibility of shipping resins, which is far more economical to not just those mills, but to the ISR mills, or even calcining it ourselves, recovering it ourselves. The whole objective here is to try to get into the low cost half of the curve, production curve. Coyote Basin, historical resource that was found by Western Mining and reported in some Energy Metals SEC reports. As you read the fine print on the bottom of the page there, just under 9 million tons, 0.2% through 8 and 0.1 vanadium for a 35 million pound resource. It's found in 4 horizons that are open along strike to the north, open along strike to the south and to the west, and open in the down dip direction. 4 different mineralized horizons. Only 2 have seen significant drilling. 24 holes were drilled by Western Mining back in 79. 21 of them hit mineralization. And as you can see by the open white dots, they're widely scattered across the property area over a fairly large area. But not only that, we also learned by reviewing the data that we've acquired that there's potential between the horizons for additional mineralization. So we're pretty excited because we know where the mineralization is. This is Western Mining's map of the mineralization at the 250-foot and shallower depth of the multiple horizons that are in a package about 200 feet thick that come right to surface and dip very shallowly to the east. And you can see, for us, this is about converting this resource to 43101 compliance is relatively easy when you know where the mineralization is. So we're putting together a plan for permitting right now will be a 50 to 70 drill hole program in the 10,000 meter, 33,000 foot range to get an initial resource to convert this over into 43101 compliant resources. And at the same time, we'll do our initial metallurgical steps on whether or not this will be heap leach amenable. This will not be the definitive test, but it will be the first step along the path. And if we're able to put together the resource that we think we can at a sort of 100-meter drill hole spacing, we'll be able to come in here and convert it to indicated resources next year. Our financing that we've completed this year gives us more than enough money to do both of those programs. At Redwash, you'll see we'll do some more work. We have some grassroots work here that needs to be done. We'll follow up the Oranga Shell shaft showing, but I don't see it being a focus of our drill program in the next 12 months. Our objective is by this time next year to have that initial resource out in the marketplace. What I love about the deal we did is that everybody actually involved in the deal with the Shift group actually left room on the table for everybody else to make money. And if you're coming in today, that's still the case. To buy this resource, we paid $500,000 US cash and 15.5 million shares of Homeland. We have a future payment if we're able to convert that resource over 3/4 of it. We'll make another payment of 4.5 million shares and another $500,000 US. If it's less than half of that resource, we pay nothing. And if it's in between, prorate it. If it's 3 times that resource, we're still capped at that 4.5 million share payment, which puts the maximum acquisition price at 14.5 cents US a pound, which is spectacular because, I'll show you why as we get to the next slide beyond this one. Our capital structure, we're 100 million shares, 101 million shares outstanding. With the warrants that came with the financing, we're just under 138 million. We're relatively tightly held by insiders and Shift shareholders given our size now, with a little under 35% of the shares held by ownership, management directors, and the free Shift shareholders, which are escrowed. Our market capitalization has fluctuated wildly over here the last couple of days. If we were, I think today, right now, would be about $25 million. But assuming we were a couple of days ago, our market capitalization per pound is 63 cents a pound, which is extraordinarily favorable. We look forward. And I say this is a win-win-win scenario for the investors that got in on the IPO. They got the warrant and the 30-cent financing. They got it in for less than 80 cents a pound. But when you compare them to where we were 2 weeks ago with our peer companies, the left-hand side here is all the companies and their resources. I didn't include companies that like ISO Energy and UEC that have resources on the Canadian and American side of the border, but your US-focused only groups. And you can see that Homeland, if we can convert this resource, will be one of the largest resources in the United States, but it's in one deposit. And whereas some of our peer companies will have this in multiple deposits. So there's an attractive value from a shareholder point of view to be looking at a single deposit from a CapEx and permitting point of view. But on the right-hand side of the slide, you're looking at our market cap per pound. And granted, we haven't been out in the field yet to do our work, but we do believe if we can take that initial program, convert the resource over, as we said, there's a real opportunity for investors to get in today to see a re-rating of the company value to our peer companies. And whether or not we should get a premium for being a single deposit versus multi-deposit, multi-jurisdictional type scenario, putting those resources together, that's up for shareholders to decide. Our board, myself, I've been in the uranium industry for over 25 years, well over 30 years in the mining industry. I formerly ran the UEX Corporation, which we sold to UEC at a very significant premium after doubling the resources through the really difficult time post Fukushima before the last run. I was at Cameco for many years and ran their worldwide exploration project oversight. Managed the Saskatchewan our exploration program, was on their mergers and acquisitions team. And so we have a pretty good sense of what's good and bad in the uranium industry. Joel was our founding CEO, exceptional accountant. Paul Matisik is on our advisory board. Paul has sold over $2.5 billion worth of public listed companies, including Your Energy Metals back in the last cycle for a significant amount of money. Our board is led by Eugene McBurney, our chair. Eugene is a legend in the uranium space, or not uranium space, in the capital market space, with his time at Canaccord Genuity and GMP, as Mark Christensen, involved in debt financing, equity financing over 10 million US dollars. And Ross McElroy just was just left Fission after selling it to Paladin. Rob Shuchuk, known for his time at Lithium Bank and Carius Capital. Andrew Tunks, maybe not as well known in North American markets, but certainly in the Aussie market with his time at ACAP, making one of the largest discoveries in the world back in the last cycle, at his time at Meteor, one of the premier rare earth companies in the Aussie market. So just a little bit what we're up to. We got a significant drill program planned for this year. We'll follow up before that program will be out on the ground doing some mapping and sampling and some airborne geophysics to help refine our targeting. But that program will start in late May. The drill program probably in late August, early September. But us, U.S. focused uranium bearing company that is going to help supply domestic U.S. needs. We're seeing that significant historical resource base that we can convert over. I've got a strong balance sheet that'll help us do it. We got attractive valuation compared to our peer companies in terms of the market cap per pound, and quite frankly, an exceptionally strong management team and board that you wouldn't normally see in a company this size. Usually you see them in much larger companies, which suggests, when I look at their board members and they wanted to join Homeland, they really believe in our story. So with that, Arlen, I'll throw it back to you for questions.
Great. And then just a reminder, listeners, if you have any questions, you can pop them in the Q&A. In the meantime, I'll fill a little silence with a couple questions of my own. What have you put together a budget or estimated what your budget would be to convert those, convert them to compliant resources?
Yeah, I think we're in that $5.5 to $6 million Canadian range. I think that's fairly safe bet.
Yeah, and that would be finalized when you go and make your applications for permitting.
Correct. So that's in progress for us right now. So because we know it's a couple of month-long process. Hopefully with the presidential order, it'll go even faster, but we won't bank on that. We're still looking at a sort of 3 to 4 month window to make that happen.
Do you have any analogies on permitting process, like recent permitting process, specifically about uranium?
Yeah, no, 25 kilometers to the north in the same county that we're in Colorado, in Moffat County, the company that's listed on the Aussie exchange called Global Uranium Enrichment last year went to the market, went to the BLM because all their properties on BLM land, as is 100% of ours, and we're able to acquire a permit in a sort of 3.5 month period of time. Now it's before all the most recent push on critical minerals by the current administration.
Yeah. Now, are you on BLM land, Forest Services land, private land?
All 100% BLM land, all 100% and with no surface rights held by private entities.
Yep. And then if we look at your mineralization, what are the depths of your different horizons you have here?
So the 4 horizons all come to surface, and they all dip about 4 degrees to the east-ish. Some of slightly it wobbles a little bit, but between 4 and 6 degrees. So it's very, very shallow. I think one of the interesting things about our property is that if it's just shallow, we show the continuity on that map that showed the outlines of what the Western Mining had put together. You're looking at an open pit resource that allows us to potentially be lower cost mining producer in the United States, and the heap leach angle would help as well to reduce costs.
We got a question from the audience here. Well, they want your opinion on where we're at in the uranium market and why pricing sucks, and went from the greatest to the hatest very quickly.
I'll go back into that a little bit. I think if you say pricing sucks, you could be right when you're looking at the spot only, but you can't look at just the spot. And so when I remember that slide that I had here, and I'll maybe see if I can flip back to it easily here. You can sit there and say, okay, spot is painful, and that's the one thing that investors get to see, to be blunt. But utilities, when they do their procurement of uranium, they don't buy uranium and go, okay, now I'll buy conversion, now I'll buy the intermediate products. They work their way down the process from the far right to the left. So the supply chain goes right to left or left to right, but the pure procurement goes right to left. So they buy, if they can, it's a 3-year process to go from yellowcake to fuel pellets. So if they're feeling a little crunched, they'll try to buy intermediary products like UF6 or UEP along the way and cut it down. But they won't buy yellowcake till they know they have a place to convert it and enrich it. So enrichment and procurement, UE and their intermediate products, UF6 and UEP, are all leading indicators of uranium price. All because they secure those services first. So back to this chart, if you look at the enrichment on the bottom right and the conversion in the middle, those prices are at all-time highs and they haven't come off. Yet your spot prices come up and come down, but the price of enrichment or of term prices actually continued to, it's been flat for the last couple of months, but it's gone up. And now it is back in a typical situation where it's about $10 to $15 more a pound for the spot price. The spot price is discretionary, right? So when the spot price started to move at the beginning of the cycle, 2/3 of your players in the spot market decided they weren't going to participate anymore because suppliers like Cameco buy in the spot, flip into pounds. So when the spot price is higher than the term price, they stop playing because it makes no sense for them to lose money on a trade. And your groups like Spot, they can't participate because their NAV is not moving as fast as others. Your mid-cherry trade contracts don't happen because you're not going to borrow pounds and be able to pay them back for less value than what you bought them for. That's not the way it works. So the first 3 months of that 6-month window was, well, we got to see the market stabilize out a little bit first. The last half is basically since the inauguration, where we're seeing tariff world come into play. And you're watching scenarios where the utilities are going, where do I buy? Do I buy Kazakh uranium and see it with tariff? Or do I buy Canadian uranium tariff? Are the Russians going to be allowed back into the market? And they have this uncertainty. So what's happening is they're sitting on the sidelines waiting for certainty to occur. Meanwhile, they're still eating up supplies in their inventory. The 3-year window that the utilities take is not that they have is inventory is work in progress in that supply chain. So yes, all they're doing is compressing their eventual desire or their eventual demand to a point where things are going to change. You'll see that reflected in the spot price eventually. But term price is solid. It's $80 a pound.
Yeah. Are you a believer in $150 uranium?
I like to think so. I do believe there's a price point where things get a little bit crazy, and I'm kind of thinking that you're going to need a sustained price of minimum of $80 to see important projects come to the fore and meet the deficit that's happening no matter what anybody says. To the contrary. But $150 starts to bring in all sorts of unusual things that wouldn't be economic otherwise, and those would only bring in swing producers that would be very short window. So yes, I think it can hit that, but I don't think it'll be sustained at that.
High prices fix high prices, right? So we got another question here. You kind of addressed it there, but how do the Trump tariffs impact Homeland?
And it comes to what we're doing on the ground, absolutely nothing. Right? We're in the United States, so we be producing in the United States, so we be tariff free from the United States. What it has the biggest impact on is risk capital in the marketplace, right? So everyone's afraid of what's going to happen. So not necessarily specific to Homeland, but specific to the entire, say, mining industry and uranium industry on junior sector markets. Risk capital is harder to come across.
Mhm. Can you pull up that slide if it's on the deck about where US sources its uranium from now?
Oh yeah, that's
That-
I put that way at the bottom in case someone asks a question about it.
Well, it was me that asked the question about it because I like to see where the supply is coming from, and there's a massive gap in the States right now, 48 million pounds of demand, less than a million pounds of production. Where are they going to keep getting it from?
Okay, so in the United States right now, there's a need for about 47 million pounds. Last year, they just came out last week and announced that in 2024 there was 680,000 pounds produced. And granted, we're seeing ramp ups at places with Encore and Energy Fuels and UEC, but I can't imagine that that combined is going to exceed 5 million pounds in the next couple of years. And they could maybe get to 10 in the next decade. That's still only one quarter of U.S. domestic production or U.S. domestic demand. And it's not being met internally. When you look at where the bottom right corner, where they're importing uranium from, I put the four countries on the left as sort of I wouldn't say the iffy countries, but certainly the more challenging countries. You have Russia, the obvious issues, Niger with their expropriation of projects here recently, and Uzbekistan, which is in the Russian orbit. Kazakhstan, maybe not so much. You could argue whether they're Russian influenced or not, but certainly their inability to move product west through Russia to the Western utilities is having an impact, and they're actually pivoting. They've done two things recently to push production eastward into China. And my view would be that we will see very few renewals of Western company contracts with Kazakhstan outside of what Cameco and Orano will be able to do. So half of that pounds, or basically 1 in every 10 Americans, get their electricity from those four countries.
So is that like 8 to 10 million pounds they're importing a year from Kazakhstan now, roughly?
It would be roughly somewhere in the 12 million pound range. Yeah.
Yeah. Okay. And so what's going to happen when that dries up?
They're going to have to find other sources. And I think that's where we fit into this picture. And I do think that we're going to see, I think a lot of people in the uranium investors wouldn't have ever experienced the bifurcated market we had in the 90s and early 2000s, where there was a different price for uranium depending on its source, whether it was CIS sourced or whether it was Western sourced. I can see that coming again, returning.
Can you go back up to your project slide again quickly? Just got a couple questions on that, if you don't mind.
No, absolutely. So the key area you want is along this sort of pink green boundary, and it comes across over into here. Um, this is only one of the productive horizons here. It's called the Fort Union Wasatch Upper Fort Union Formation. It's the key host of all your projects in Wyoming, in your UISR projects. To the north of us, 25K is Maybell. They're in the higher stratigraphy than ours, and there's mineralization in the lower stratigraphy, and that's the lower stratigraphy is the stuff you see farther south in the Colorado Plateau that's been productive for years. So anywhere that there's sandstones that were exposed to surface or groundwater flow that from a uraniferous source is productive and potentially productive in the entire Colorado Plateau, particularly here where it's vastly underexplored.
Mhm. And you just touched on it briefly. You said there's potential even in between the horizons.
Yeah, I think one of the things that was this gets very difficult to explain, so apologize and if I bore you to death, but uh, back in the 70s, we used gamma probes to probe the holes, and it's done consistently around the world today. And it's usually very, very effective, and it can be very effective. But it assumes that your deposits are old enough that your uranium, which decays to lead and through 16 different steps, is in equilibrium with all the daughter products of the radioactive decay sequence. So gamma probes don't actually read uranium, they actually read bismuth. It's a gamma emitter. Uranium is not a gamma emitter unless you send what's called neutrons into it and start that essentially miniature chain reaction kind of thing happening. And it will. So there's a tool that came out in late 1970s called the prompt fission neutron tool, which now Encore owns the intellectual rights to, that could read uranium directly in the hole, if that disequilibrium between the daughter products and uranium existed. we saw only 2 holes were done at Coyote Basin, the last 2 holes of the program, and it showed us that between the key horizons, there were these PFN peaks that were never sampled. And what that tells me is that there is definitely potential to find uranium in the sandstones between the known horizons. It's a stretch. It's one of the areas that we will obviously be watching for as we do our drill program. I'm not going to promise that we'll find more, but we're certainly going to be aware that the potential exists.
Mhm. And you have above and beyond that 35 million pounds, quite a lot of extension, even on, I guess, on the Red Wash project too, as well, the same stratigraphy.
Yeah, I would agree. I think even just looking at Coyote Basin, your 35 million pounds sits down in this area here. And,
Right.
and so there's all of this formational potential here that continues to the north, to the south, and then of course over to Red Wash where we have 35 kilometers of it.
Great. That, Roger, that concludes the questions. And again, we just want to let all the listeners know that Roger and myself are always available to talk to shareholders, protected or prospective shareholders, to answer any questions, provide any information. We can be reached at 604-684-6730. I'm Arlen Hansen with King Communications, and that is Roger Lemaitre.
Thank you very much everyone for your time today.